Welcome guys to my channel. So if you are new to the channel, please I will urge you to subscribe to the channel, like and also comment on the video so that I will be encouraged to make another video. Alright, so this trade was on BTC. It was very simple as usual. So one thing that make trading difficult is when emotion setting. So first thing that I did was to identify the directional bias or what BTC was doing, because BTC was on a massive downtrend. So what I did was to go to my higher time frame and identify and check higher time frame POIs, and then come to my lower time frame to look for the strategy that I trade. So this trade here, I will show you the before, and I share this trade with my students on my WhatsApp platform. Alright, so let me show you that. So this was the bias. You can see BTC on weekly time frame POIs. So this was the bias, and then I told them setup should be on 1 hour time frame or higher. So I send in the trade here. So this is the setup here. So this is the setup here. This is BTC. Alright, so this is the setup, and then I'll show you the second entry. So this is the record of my trade. So this was okay. This one was playing. This is good trade. Alright, so guys, that is it. I'm going to take my time and explain everything about this strategy. Alright, so this is what I did. The first thing I do was to go to my time frame and spot out my higher time frame POIs. So I go to my 4 hours time frame. So on my 4 hours time frame, since BTC was bearish, I cannot really mark out the zones very well. Alright, cannot really mark out the zones very well, where I was expecting a possible reversal, because it was in a very massive downtrend. So I proceed to my daily time frame. So on a daily time frame, the zone was not really cleared, alright, but I know that okay, there are zones here that can possibly reverse price. So I still proceed to my weekly time frame. So on my weekly time frame, you can see on my weekly time frame here, there is an order block there. So I mark out this order block. Now, since I mark out this order block, the only thing that will make me to take this trade on this on my lower time frame is when market pull down to this my higher time frame POIs and then give me a market structure shift. That is when I will take this trade. Yes, I'm not going to take this trade. So the only thing that will make this trade to be valid, to make this POI to be valid, is when market pull down to this weekly time frame POIs and then give me a market structure shift, either on my 1 hour time frame, 30-minute time frame, or any POIs that you want to use. So that is the only thing that will make me to take this trade. Yes, I'm not going to take this trade. Alright, so these are all daily weekly time frame POI like this now. All this one are POIs on your higher time frame. So when you go to your lower time frame, you look for you look for a reversal concept, which is a market structure shift. Alright, so if you are new to the channel and you don't know what market structure shift is all about, I am going to take my time and explain. Alright, so all you need to do is to just keep calm. So now on the weekly time frame, price has already pulled down to you have already pulled down to our weekly time frame POIs. So next thing for us to do is to go to 30 minutes time frame, 1 hour time frame, or any time frame that you want to use. So this is 30 minutes time frame, right? When you come to your 30 minutes time frame, what you need to look at for before you take your trade is what we call a market structure shift. Now, what is market structure shift? Market structure shift is an indication that the current trend is coming to an end and the market is about to trend in an opposite direction. Now, if you come to the 30-minute time frame, now the pattern that price used to approach your point of interest before it got triggered, that is your higher time frame POIs, matters a lot. If the price is aggressive, you use your lower time frame most time, but if the price is not aggressive, try and use a higher time frame. That's why I told my student that if they want to do the carry the analysis, they should use 1 hour and above, because you can see price was approaching the point of interest with a trend like manner, and when price approach your point of interest in a trend like manner, there is 80 to 90% chances that that setup is going to hold, right? But you can see on a 30-minute time frame, the chart is looking like a bit, it's not too clear, but I can analyze this. But for you who is still trying to learn the strategy, you go to a higher time frame that your point of interest or the chart will be clear to you. So you go to 1 hour time frame, you can see there's a lesser noise here. Alright, so let me quickly explain what market structure shift is all about. Right now, if market is trending up, creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then instead of market to create another higher highs, if market create another higher highs, instead of market to now put and create another higher low, it break below the previous higher lows. It break below this low. When it break below this low, we say a market structure shift has occurred, because what we use to identify an uptrend is when market is creating a series of a higher low, higher highs, higher low, higher highs, higher low, higher high, higher lows, higher high. So anything outside higher highs and higher lows is no longer an uptrend again. It simply means something is about to happen. It simply means the market is about to change direction and is about to trend in an opposite direction when you observe a market structure shift. Alright, the same thing is applicable to a downtrend. When market is trending down and then you are creating a series of lower low, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then create another lower lows. Instead of market now to create another lower highs, now break above the previous lower highs. Alright, and then the candle closes. When the candle closes, you mark this place as your market structure shift. And what does market structure shift tells us? It tells us that the current trend is coming to an end and the market is about to trend in an opposite direction. Alright, so you already know that there are 3 ways that market make it movement: either an uptrend or a downtrend or a ranging market. The market is moving from support to resistance, resistance to support, support to resistance, resistance to support, support to resistance, resistance to support. Alright, now when market is trending, or it simply means that the people that are in charge of the market is buyers. It means that buyers are in charge of the market. When market is trending, and it means sellers are in charge of the market. And when market is ranging, neither the buyer nor the sellers are in charge of the market. It means consolidating. It means there are 50% of buyers and 50% of sellers in the market, and this is a state of indecision in the market. All right, so back to the chart. Now on the weekly time frame, we mark at these zones, mark at this zone here, mark at this zone here, and then when market pull down to this zone on our lower time frame, what should we look at for? There are two aspects, there are two key aspects that we use in trading this strategy: SLP, structure, liquidity, and point of interest. There are two key aspects, or two concepts that we use in trading this strategy, right? The concept of reversal and the concept of continuation. And the concept of reversal, what we make use of is what we call a market structure shift. Market structure shift is what we use in a reversal concept, and what we use in a continuation concept is what we call a break of structure. And specifically, what we use is a double break of structure or a multiple break of structure. Now in this scenario where we are looking for how we can reverse the market, where we are looking for what we can use to reverse the market, what we are trading, the concept that we are using in this aspect is not a double break of structure, rather is a market structure shift. Now what do you observe? Before our point of interest got triggered, our higher time frame point of interest got triggered, market was in a downtrend. How do you know that market is in a downtrend? When market is creating a series of lower low, you can see market creating a series of lower lows, lower low, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then lower highs. Now when market creates lower highs, instead of market to now pull down below and create another lower highs, what does the market do? It break above that zone, right? This is what happened. It break above this last lower highs. So we mark the zone, we watch the candle, we mark it and observe the candle that causes this market structure shift. You can see I'm giving you a step-by-step analysis. So if you open a chart and you want to analyze any pair, that's the first thing that you need to do. If you are trying to use a reversal concept, mark your higher time frame POIs first to know the direction of the market. Mark your higher time frame POIs. After that, you go to your lower time frame, that your 30-minute, your 1 hour time frame, where there is lesser noise compared to 5-minute and 15-minute. So you go to your 30-minute time frame, 1 hour time frame, 45-minute time frame, 2 hours time frame, 3 hours time frame, as the case may be. Alright, so when you go there now, you now mark out the next thing for you to look out for is your structure part of the strategy. So after the structure part of the strategy, you look for the inducement part of the strategy. After the inducement part of the strategy, then you now look for the point of interest part of the strategy, and then how you can take your profit. All right, so all this I'm going to explain, so you just have to stick around and watch the video to the end. All right, so like I said, if you stick to this channel, the knowledge that you are going to gain is going to profit you a whole lot. It's going to profit you a whole lot, because I'm going to pour out my heart and explain in detail every trade that I take on this channel. I'm going to create a video and show you how I took those trades, or the analysis I make before I took those trades. All right, and then I'm going to show you what may likely occur on the next trade, or which I'm still going to show you, because right now I think there is a setup that is forming on BTC currently. All right, so this is what happened. Market take at this last zone here. The reason why we do not mark this place, because when market pull down, it does not close below this. So if we close below this, we are going to mark out this zone here. But since it did not close below this, this is where the zone end. This is where the downtrend ended. All right, if you close below this, we are going to use this. All right, so this is a candle that causes the market structure shift. So this is where the market structure shift occur. So if you want to target, you can target MSS. All right, so this is the market. This will get our market structure shift. So the next thing you look out for, you have to mark it very well. You have to mark it very, very well. All right, so the next thing we look out for is the inducement part of the strategy. Now, what is an inducement? An inducement is the first valid pullback after a market structure shift. Now, by definition, it's a first valid pullback, not just a pullback, but the pullback has to be a valid pullback. And I'm going to tell you and show you what a valid pullback is all about. A valid pullback after a market structure shift. That means you cannot get an inducement before a market structure shift. Your inducement will always come after a market structure shift. All right, so now we have gotten our market structure shift. What is the first valid pullback that we have now? What is the fair pullback that we have now? Now you can see after this candle that causes the market structure shift, it must break above the last. It must break above the zone, either for uptrend or downtrend. It must break above the zone and then close with a candle body above the zone, not with a wick. Yes, we are supposed to use this bearish candle here as our market structure shift, but it does not close with a candle body. But this bullish candle here, it breaks above the last lower highs, and then it closes with a body candle. So we mark it as our market structure shift. Now for the inducement part, you see that the first pullback that we have is this bullish candle pullback. Now for it to be valid, it has to pull back and then close above the candle that causes the market structure shift, or at the exact point. This should be the exact point. If you close this here, if the candle now pull back and close here, we mark it as our valid. This will be a valid inducement, or close above it just like this one did. Now say this is a valid inducement. All right, so we now mark our inducement. All right, this is where the inducement pull back and stop. So we mark it this place as our inducement. It's almost at the exact point. So let me zoom it well. All right, so this is our inducement. So we will now mark our inducement. Now we have gotten the structure part of the strategy, which is a market structure shift. Then we have gotten the inducement part of the strategy, which is this first valid pullback. Now the point of entry part of the strategy is what we need to get. Now there are different point of interest that we make use of. We make use of order block and a breaker block. All right, so in this video, since I make use of a breaker, I'm going to explain only a breaker block. Now there are other videos that are there on this channel that is going to help you. If you have not taken your time and watched all the video on this channel, I don't know what you are doing now, because this is a time that you need to be serious. You need to lock in. You need to study like never before. Study as if your future depends on it, because it does. Right now, I'm going to mark out all my point of interest. All right, so marker this breaker block. Now what is a breaker block? A breaker block is a fair order block. All right, so now this zone is where market is supposed to pull down and then pull up and then sell. Since market break above this is a breaker, so we mark this breaker, we mark this breaker, you mark this breaker. Now when you are marking your breaker, you mark the body and then you mark all the candles that are involved in that breaker. All right, so we'll mark this breaker like this. This is the first POI, and then this is another breaker here. We'll mark this breaker as well. Mark this breaker as well. All right, so we mark this breaker as well, and then this is supposed to be, this is another block here. So you can see the POI are somehow joined together. All right, so we have like 3 POIs now that we need to use. Now in picking your proper point of interest, now there are 3 rules. There are 3 rules that are involved in picking a proper point of interest. And what are those 3 rules? The number 1 rule say there must be a market structure shift. Now before you look for your POI, before you look for your point of interest, the first thing that you need to look at for is that there must be a market structure shift. That means you don't even intend to take any trade at all except there is a market structure shift, or which we have gotten our market structure shift here when this candle, this bullish candle, pull up and then close above the last lower highs here. All right, so now the second rule say there must be an inducement. Now you have gotten the inducement part of the strategy. That means before you look for any point of interest that you want to take a trade, there must be an inducement. All right, so this first value pullback here, the market pullback and closes above the candle. So this is inducement. Then the third rule say that you should mark out. I'll give you 5 rules. It's supposed to be 4, but I'm going to give you 5 rules. Now the third rule says that you should mark out all the possible point of interest. So we just did, we mark out all our possible point of interest, this breaker, and then this other block that causes this market structure shift. So now the third rule says the point of interest needs to be unmitigated. Sorry, the fourth rule says the point of interest needs to be unmitigated. Now what is mitigation? Now as market is creating your inducement, it means when the candle that is causing that inducement, remember, it can be a single candle, it can be a multiple candle, right? So now as the candle that is causing that inducement, as it's pulling down, as it's having that pullback, it should not touch any point of interest that you want to use to execute your trade. That means as it's pulling back now, if you touch this point of interest, it means this point of interest has been mitigated. It means it has been disqualified. It's no longer useful again. You cannot use that point of interest to execute your trade again. That means you should not use any point of interest. If you pull down now and then touch this point of interest and then touch this breaker and touch this breaker, that means you can no longer use it too. If you pull and touch this and it doesn't touch it, that means this one is still valid. Now when this one pull back and closes, it does not touch any of the 3 point of interest. That means the 3 point of interest are still valid to be used as our point of interest. Now the last rule, which is the 5th rule, say that you should pick the point of interest that is closest to your inducement. Now the one that is closest to our inducement is this breaker, this first one here. So we are going to delete this and then delete this. All right, no, I'll delete this and delete this. And let me clear the chart. So the one that is closest to our inducement is this breaker here. That is why I took this trade from this zone, mark out this place, took this trade. So mark out this zone, took this trade from here, and then in taking my profit, I have to observe the how to reserve and use trend and liquidity. Now, trend and liquidity is very powerful. So 80% of the time you see them on the chart. So I have to use trend and liquidity to take my profit. Alright, my profit is targeted as clearing this trend and liquidity, because as market was approaching this point of interest, it was approaching it in a trend like manner. That means there are liquidity that have been accumulated on the upside of this trend. So market will eventually buy and clear as this trend line liquidity. That's why I have to, put my order was targeted at clearing this trend and liquidity. Alright, so market eventually buy, and then market will eventually buy, and because of a double breakout structure that occurred, so when around here market retrace, as it was retracing, I know that my POI is valid, so I still had my order. So when market retrace, then here when market retrace to this zone, it now gave me another opportunity to enter this trade. Right, so here was my setup. So when market retraced to this level and then it started buying again, I was looking for a double breakout structure to take another trade. So here I got my double breakout structure when market take out this zone here, and then market took this zone again. This is where I got my double breakout structure, because these are what is a double breakout structure. When market take out two key zones, that's what we call a double breakout structure. Market take out two key zones. Now initially I said I'm not going to explain order block, PO, point of interest, but in this second entry I use order block. So you are lucky I'm going to explain that on this video. Alright, now like I said, if you are not subscribed to this channel, subscribe to this channel, refer your friend to this channel. Don't be greedy. Alright, I'm doing my possible best to make sure that someone out there will benefit from this video. And then if you are looking for a mentorship program, you can contact me. My contact address on the description of this video and on the comment section. You can contact me. I am that mentor that will have your time. You see, all my students, I have full time for them. So I have full time for them. Don't go and pay for someone that will not have your time, that will not attend to your question, or you go and buy course online and then you begin to watch video. No, all my students, I take them on a live class. All right, take them on a live class and tell them what is about to happen next. All right, and also give them that opportunity to analyze themselves and also guide them. All right, sometimes I call them and watch them analyze and put them through. That is it. So one thing that affected me so much then when I started was that I have a mentor, but the mentor doesn't have my time. Right, so sometimes on my Meta 5 I will not even know some certain things. I don't even know how to take partial profit. I know there are some things that you need to learn yourself, but there are some that your mentor need to guide you at least. But so there are a whole lot of things that I was not exposed to, I didn't know then. So it affected me a lot, but I'm that kind of person that you can ask a question at any time. Right, so it's important you get yourself a mentor. Even as I'm explaining, you need a mentor, because there are some kind of psychology that your mentor is going to guide you through. Trading is beyond strategy. All right, there are some things that your mentor will guide you that will make you profitable. So back to what I was saying. So this is a double breaker structure. Market take out the zone here and then this zone. So after that, after I have gotten my double breaker structure, the next thing for me is to look for my inducement. And what is inducement? The face value pullback after a market structure shift. So now when market pull back to this, when market break this, this candlestick here is what causes the double breaker structure. Take out the zone here and then take out the zone here. Alright, so the first value pullback is this here. So mark this place as our inducement. So this is the inducement. I mark this place as my inducement because this candle, in conjunction, this candle in conjunction with this bullish candle pull back and then close above it. So that is a valid inducement. Then what is the point of interest? Order block. Now in this, we have two types of order block that we use in trading this strategy. We have the bullish order block and the bearish order block. Now the bullish order block is when you have a bearish candle and a bullish candle that engulfs it. You have a bullish candle that engulfs it. Then in a bearish candle is when a bearish order block is when you have a bullish candle and a bearish candle that engulfs it. Now there are ways that you pick your point of interest using this order block. Now if this is your bullish order block and the candle close with a body, with a full body like this, you have to pick, if you want to pick your point of interest, you cover this bearish candle fully. Then in this scenario, you cover it fully like this. This is the way. So you place your, alright, so you place your buy here and then you put your stop loss here. Here you place your sell here, put your stop loss here. But there are scenarios where you have something like this. There are scenarios where you have a long wick. If you have a short wick as well, if you have a short wick, you cover the whole body. You will cover the whole body. If you have a short wick here, let me say short wick like this, you cover the whole body including the wick. Alright, so this one should be, you cover both the short wick and the body Alright, but in a scenario where you have a very long wick, for example, let's say you have a very long wick here. Let me take this. In a scenario where you have a long wick, you only cover the body, or in a bullish order block, you cover the bearish body of the bearish candle completely, and in a scenario of a bearish order block, you cover the body of the bullish candle. Alright, so that is how it is. So in this scenario now, this is a bullish order block. So after we have gotten our double breaker structure, we have gotten our inducement. So we look for order block in this. We look down to check if we have any other block. So since there is other block, you can see, I just mark it here. So since there is other block here, just mark my other block and execute my trade. Mark the body. Now I just give this gap here just for spread. Alright, just for spread. And in taking my profit, I have to use trendline liquidity to take my profit. Trendline liquidity. because when market was approaching this level, you approach it in a trend like manner. Alright, so this is 1:4.6. Alright, so you can see market buy and take out this zone. So market took out this zone. Here there was another double breakout structure. When market was rallying up, and this bullish candle take out this key level here, and then take out this key level as well. This zone here. Take out this zone here. So when you take out this zone, what happen? We have the next thing to look out for is inducement. So this very candle pull down and close at the exact level. So this is a valid inducement. Now this is a valid inducement. If you look down, so market took out this level here, took out this zone here, and then took out this zone here, then give us our inducement. This is the inducement. You can see this is a valid inducement. So after that, what happened? We have a order block on this chart. So this is the second strategy that we use. So you mark out. Remember, I see the way you mark out the order block when you have when you have a bearish candle and a bullish candle that engulf it. If the bearish candle has a body and a short wick, you cover both. So I have to cover both because it has a very short wick. So I covered in both. You can see market pull down and trigger this point of interest, and then started buying. Alright, started buying. So after that again, after you have gotten your, remember, after you got your market structure shape, or the next thing that you'll be looking at for is a double breakout structure to continue trading the trend. Now this is what is happening currently now on BTC. You can see this bullish candle has now caused a double breakout structure, or what we call a multiple breakout structure. You take out this one here, and then this is another zone on its own. You take out this zone here again. Now you now look again on your left side and observe if there are other previous existing zones that the market took out. Alright, so this is another zone that it took out. So this is another zone. Alright, I think this is another zone as well. Does it take out the zone? No. So these are all the zones. So this is a multiple breakout structure. Now when you see a multiple breakout structure on the chart, it simply means that that zone is very that means your point of interest is likely to hold, because for market to break it up, for market to have a multiple breakout structure, means that the numbers of buyers are very, very high in the market. Alright, and from this bullish movement you can see it. So after that, now what do we mark out for? Now we follow the rules in picking a proper point of interest. Since you look down, there is no other block there, so we follow the rules in picking a proper point of interest. Now remember, you can as well switch your time frame to know which is best for your setup. Now any time frame that you see a setup, you just go ahead and take it. Alright, so now we mark out our inducement. Now what is inducement? The first value pullback after a market structure shift or double breakout structure. So in this scenario, this is a double breakout structure. So what is our first pullback? This bullish candle here. This is our inducement. So we mark our inducement here, right? Mark our inducement here. Now after the inducement, what now? Following the rules in picking a proper point of interest. Number one rule say there must be a market structure shift or a double breakout structure. So in this scenario, there must be a double breakout structure, or you can say it can be a multiple breakout structure or a double breakout structure. So in this scenario, we have a double breakout structure, or when market take out all these ones out. So the second rule say there must be an inducement. So we have our inducement here. So we have our inducement here. The third will say that you should mark at all your possible point of interest. Now, in marking at all your possible point of interest, mark the body of those candles. Mark the body of those point of interest. Now, this breaker block here, you can see the body of this breaker and this breaker is joined together. So please permit me to delete these lines. I have to. I don't like my chart to be this dirty. So we mark out this is, since this one is joined together, mark it out this way. Alright. Mark it out this way. Now this is another one here. There is another one here, kind of. This another one here. I think so. So we have different POIs now. We have like 3 POIs, the candle body. So let me zoom in and observe if there is any other one here. And this, so yes, we have another one here. This is the body. We have another one here. That is in line with this. So it's the same line with the one there. So you can just leave it. So we still have another one here, which is in line with that third one. So we just leave it. See, since they are in the same line, so we now have 3 points of interest. Now the fourth rule says you should pick the point of interest that is unmitigated, or the point of interest that you are supposed to use should be unmitigated. So as market is creating an inducement, should not touch any point of interest. Now this 3 point of interest has not been touched. Now the last rule, which is the fifth rule, says that you should pick the point of interest that is closest to your inducement. So the one that is closest to our inducement is this. So this is where we should be expecting BTC to buy from. Alright, you should be expecting BTC to buy from. We'll be expecting BTC to pull back here and then we long. But now the way BTC is going to approach our point of interest will show us where we are going to take our profit. The pattern that is going to approach our point of interest will show us where we are going to take our profit. So if you approach our point of interest in a trend-like manner, it's will be okay. We know that okay, this is an A plus setup when we approach our point of interest in a trend-like manner. But if you approach it in a very impulsive move, I will be very skeptical to take this trade. But when he approaches it with in a trend-like manner, for example, if BTC starts selling now, creating a series of lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, and then begin to if we approach it in a trend-like manner this way, I know that okay, this point of interest is going to hold. So if I'm selling, I will set the to clear out this trend line liquidity, or use the last highs to take my profit. So I'll trade and then target a very good risk to reward. One risk to reward is from 3 and above. So you can target 1:4, but when you start retracing, it will give you a clue on how your setup should be. So this will be the end of the class. Please do well to comment. There is a video I am thinking of making, but it depends on you guys. If you comment, if you like, if you share this video and I get more engagement, I will be more encouraged to create more videos. I will be encouraged to create more videos to help you guys. But if you don't, I will feel discouraged and also feel reluctant about creating more videos. Alright, so take care guys. See you in the next video.